Hi guys, and welcome to this recording. So I did ask on the group in regards to what is it that you want me to look at, or any questions that you've got. And yeah, I got a couple of responses. So I'm going to look at Brent in detail. So for those of you who are going to be looking for opportunities to trade Brent in the coming weeks or months, this might be of helpful to you guys. And I'll also just take a look at Euro USD, Pound USD, Dollar Index. But already we know our directional bias on those three assets, whereby we're looking for, we're in a bearish momentum right now on Dollar Index, which inversely relates to bullish momentum on Euro USD and Pound USD. So yeah, I'll try to make this as short as possible as I can and accommodate most of the stuff there. I don't want it to be too long. I've realized that not many people here in the group watch the recordings. You get a YouTube video that they've recorded for like 25-30 minutes and there's only like 6 views, 5 views. So yeah, it's quite demotivating at the end of the day. Though we are here to edge one another, though we are here to improve one another in this industry of currency trading. So yeah, participation is very important, guys. As much as I can feed you with a whole lot of educational content, but if you really don't participate in the market, if you don't participate in the discussions, then yeah, the journey is going to take quite a long time. So yeah, we are on the monthly chart. That's Brent. We are on the monthly chart. Ultimately, our target was reached, which was around, I think it was $73 or something. That was the ultimate target for bears to find support. And right now we have tested almost a support level, which goes way back 18 years. That support level goes way back. So yeah, it's not a coincidence that we are seeing now bulls are trying to push price further up. So we're going to do our rough institutional supply and demand analysis, just to have a look and see where we are likely to go and what levels we should be working with in terms of our price action. So remember, institutional supply and demand, you go to your line chart on the monthly, you go to your line chart, you mark your highs, your lower lows. And right now I would say Brent is in a downtrend. I think shorts are ideal, though we have reached a certain time where the bulls might really give a fight against the bears. So it's for us now to define what levels those bulls are likely to reach, and what are the chances of the bears taking further control. So yeah, I've just marked the peaks, this old low here, and we also have this old low. We have almost like what can I call this then? Almost like a lower high in our bearish momentum. Remember, when price is going to the downside, lower highs and lower lows. When price is bullish, higher highs and higher lows. So I've marked the ones that are in relation to current price action. I'm not going to mark that higher high that we've got there, because it's way far. That was right deep in the Ukraine invasion when we saw the highest in Brent. So I've just marked the ones that are in relation to current price, because that's where I'll be likely looking for opportunities. So these two old lows that I've marked, one here roughly at like $79.97 and also $70 per barrel old low. So once you've done that, remember we only use the line chart on the monthly chart. Once you've done that, you go to your candlestick. So now on the candlestick chart, is there anything of importance that you can see or that you can relate to? Looking at the lows that we marked, our old low, intermediate highs, you can see here it's marking the opening of the down close candle. And from here, you can see that Brent has got the ability. There could be a pressure for bulls to push price all the way to $85 once again. And only when we get there, then we should see a continuation to the downside, right? Targeting this old bullish order block. But yeah, $85 a barrel could be a stretch at this moment in time. But yes, it's not something that is not surmountable. Price can reach that price point. So our institutional order flow on the monthly chart is definitely to the downside, meaning we need to be looking for premium areas. We need to define our premium zone where price is likely to find resistance for a move to the downside. You can see like last month, right? Last month price found resistance around 77.65, like where the current price is. Why is that so? Because it was feeling the imbalance between the two candles. You see, then price dropped to the downside, right? From the $77 to the downside, it dropped a couple of 260 pips. And right now, price has returned to that same level again. Definitely on a lower time frame. Say we're looking at the weekly or daily or H4 price action. There's definitely a discount, a premium array that is providing huge resistance in terms of price action, thereby pushing price to the downside. So currently, what are our targets? If we are saying that Brent is bearish, where are we targeting price to trade to? Right here. These are your targets, and that's now external range liquidity, right? The intermediate low from previous month, that's your internal range liquidity of sell stops, right? So we now need to define our premium array. We already have an idea of where price is likely to trade to. So that's our old low, right? But from where? That becomes the question. From which level are we likely to see better opportunities for us to short Brent? So I'm going to go to the next lower time frame. And already you can see we've got what here? Consolidation. And that's a weekly chart, right? Which has got roughly about 616 pips, right? That's a weekly range. Now you can see our external range liquidity here of sell stops, and we've got internal range liquidity above here and right here, right? And ultimately, if we do break above this old highs here, then we could see Brent move back to the $92 a barrel level, right? So those are your liquidity pools, which price is likely to trade to and run those stops before a move to the downside, right? That's our weekly chart. Let me just zoom out so that you can see, right? So we're talking of above $80.11, right? the chances are very high price will trade to that level before a huge move to the downside, right? So with this in mind, you can see the price action that we have, right? We've got a weekly consolidation. Most probably price is redistributing again for a further push to the downside. Buyers are getting trapped, right? And where do those buyers put their stops? Right below the old lows, right? That's where they put their stops. So now you can see on the weekly chart what we've got here. Current week, we've got a low. In the current week, we have a low. And then 2 weeks back, we've got this high. You can see that's a very good chunk of an area where you can target your shots and ultimately price go to the downside. But we also have now on the premium side, we've got here. Now this is a high probability bearish order block. Why do I say so? Because it's accompanied by a fair value gap, right? This is our high probability bearish order block. Control C and Control V. So that's our high probability bearish order block. And then here, that's our fair value gap. Let me just mark that out quickly. So got our FEG there. That's on the weekly chart. That's on the weekly chart. And we've got the order block, bearish OB. So I would say right currently, I think Brent is no man's land. You wouldn't want to get into a trade right now on Brent because price is like right in the middle of a consolidation, and you can even see our expansion to the downside from the order block. You see this displacement here. This is what you need to see, guys. This is the footprint of institutional pricing. You see, that's the footprint, that's displacement. You need to see that expansion in order for you to determine your level. So I'm going to grab my fib from high to low, and you can see where our premium level is right inside this range here, right? Let me just make this proper. You see, I just use the fibs to define my premium range where I'm expecting price to find resistance before a push to the downside, because I believe this consolidation that's happening here, buyers are just getting trapped. Yes, we are going to see an expansion to the upside, but that's just trapping more buyers to go long on Brent before a huge push to the downside. That push to the downside is going to come in the form of this. You see, we are on the weekly chart, right? It's going to come in the form of candles like this. 1, 2, 3. You see, those big bodied candles. We're going to see that in terms of expansion to the downside targeting $70. Whether we've got that's where we've got external range liquidity of sell stops. So I'm going to remove the, okay, let me just leave the, yeah, though it's going to be a bit noisy, I'm going to leave the fibs there. I need to put this one right here. Right there. So the big gray shaded area, that's our premium zone. So all the way to 79% retracement level. That's our premium zone. And look where the imbalance is coming in at, that fair value gap on the weekly chart, the one below the high probability bullish order block. This is where now you're going to be anticipating shorting this pair, right? Of course, you're going to have quite a big stop, right? Because your stop has to be above the OB high. Right? So now when we go to the daily chart, okay, we have already seen that on the weekly chart, price is currently consolidating since I think third week of April. Price has been in a consolidation and not really expanding in any direction. But now we have recognized our premium levels where we can look for shorting opportunity, and we've got a high probability or B, right? So we're going to come to the daily chart. Now on the daily chart, look where the liquidity pool that I've marked, the one above 81 at our 62% retracement level. What do you see? Boom, order block. Though it's not a high probability, see, because it does not have a fair value gap, but it's just below our optimum trade entry, $85.47. So yeah, expect maybe a reaccumulation in fair value. Remember this weekly fair value gap to the downside. Let me go back. See this imbalance here, weekly fair value gap. Expect reaccumulation for a push towards the liquidity above 81 and 82.4 liquidity pools. You see, expect a reaccumulation here, right? Trapping more buyers. Of course, if they do take profit, those buyers, it means they are profitable. The reason why I'm saying we could have a run to the downside, a huge run to the downside. These lows here, 1, 2, 3, and 4, they're too clean. You see, they're too clean. You need to see price taking out a low with big wicks and then a move in the opposite direction. These ones, they are quite too clean. So yeah, looking at the daily chart, we've got our bearish order block here, which is not high probability, but it's also still in the premium zone. Can you see? It's in the premium zone, just between our 62% retracement level and optimum trade entry. So that's your ideal number one zone for shorting opportunities. Ultimately, you need to look at between 82.83 and 83.50, right, for shorting this asset here to the downside. You see, so I would favor shorts on Brent, Jerome. I would favor shorts on Brent from these premium areas that I've marked. Right now, I think we are right at the top of the range. And when we go back to our tutorials, trading inside the range, price right now is well above 83% of the range. So yeah, shorting would be ideal at the current price. But for me, I would want to see a run of this internal range liquidity above 81 and above 82 for me to short end with my stop above 87. Okay? Or even ultimately above this candle's high. That's like 88.99. That's where I would likely put my stop, because I'm expecting an expansion to the downside that's going to take out 71.30. So yeah, ideally you need to be looking for shorting opportunities on this pair here, somewhere around $81.0 a barrel. Yes, where it is, it's also good for you to take shots, but those are not long-term shots you're going to stay in. It's like an in and out. But if you get somewhere, if you get in a shot above, say 82, right, above 82 or above 83.50, you short that asset from that kind of a price point. That's when you hold that trade for the ultimate goal of 71.30, which will be your first profit scaling target, and target number one at $67 a barrel. So yeah, shorting opportunities are ideal, even if you're going to scalp Brent on short time frames or lower time frames. If you're going to scalp, then ideally you need to scalp shorts as high as possible inside the weekly range. You see, as high as possible inside this range here. Let me just mark it. So that's the high. Yeah, that's our high, and that is the low. So as high as possible inside this range, because this is the range equilibrium, as high as possible, then you get to define your premium arrays inside this range here. You can see we've got relatively equal highs there, 78.60, and here we've got what is our high on this candle here? We've got 78.59. There was just this tiny run of stops above that level, then price rejected and traded to the downside. You see, so as high as possible inside this range here, you define your premium areas that you're going to short from. Say on H4, that's where your premium area is going to be, and then you short it on hourly chart. You see, like this fair value gap here, you can scalp when price reaches this candle's low, 78.034. That would be an ideal short scalp for price to move to the downside, but you have to use a tight stop because you could be trapped. So yeah, that's pretty much in regards to Brent. Shorting opportunities are ideal. Now we're gonna shortly look at pound USD. Remember pound USD, if we go back to our open interest, I think from 4 or 5 weeks ago, I did say this currency pair is braced now for a real move to the upside, and right now target still remains at 1.30. Only then, when price reaches that level there, you should anticipate a strong resistance and price push to the downside. So longs are ideal on pound USD. Remember this breaker here, right? Correct. 1, 2, 3, 4, 5 weeks ago, we had this bullish breaker. Price returned, boom, move to the upside. Okay? Break and retest. Price came back. Nice, 178 pips. And we are still inside that fair value gap. So expect this gap to be filled, right? So right now there is an opportunity to get, let's see. We've got close to 160 pips on offer on pound USD. Price is currently moving to the upside. Only then, when it gets to this bearish order block, yeah, expect a bit stiff resistance there from the sellers. The sellers will likely push price down when it gets to 1.30, right? So if we are that long on pound USD, same applies on euro USD. We are also looking for long entries, and right now we still have liquidity above 1.10. There is liquidity above 1.10, and you can see price is moving to the upside. Expansion, short-term high, lower high. We are likely to create another high above 1.10. I'm not going to go into detail with this because you already know, guys, what we are looking at on these currency pairs. And then with dollar index, like I said before, expect a new low in the coming 2 or 3 months. Expect dollar to trade below 100.50. I'm just rounding it to an institutional price point. Expect dollar to create a new low. Expect dollar to be under immense pressure, like we have seen for the past, say, couple of days. Dollar has been under huge pressure, also as the consequence of the payroll data that came out on Friday. So yeah, right now with dollar on daily chart, expect price to push all the way to this bullish order block, and most probably face the buyers come in to fill up this liquidity void, the imbalance, and ultimately a further move to the downside. So yeah, that's DXY, that's EU and GU, and Brent for you guys. So Another thing that I would like to mention, if you are going to trade Brent, right? The reason why I've gone into detail with Brent is because we don't really talk about it. So once you get like a focus, that's going to give you a guideline for like a month guideline. You see, like right now, ultimately, we are looking at Brent trading below 71.30, right? That would be the ultimate target. But you can see 71.30 and this old low here, chances are very high that 67 becomes like a long-term target for shorts from 81.096 and 82.47. So if you are going to trade Brent, make sure your risk, you've calculated your risk properly, and don't risk too much because the drawdowns can be suicidal. The drawdowns can be very painful to watch if you're not strong enough, or if you risk too much, then the drawdown is gonna hit you big time. You might even get like margin calls. So yeah, that's pretty much about it in regards to what you guys asked. So yeah, I wish this is going to be helpful to you guys. I hope it's going to be helpful and you're gonna use it in your analysis also. And if you have any questions, just send them on the group, guys. Send them on the group so that I attend to them all at once. Yeah, you can private message me, but it's also good to interact with other group members so that we move further together. So yeah, that's pretty much about it, guys. And yeah, I wish you nothing but the best and happy trading, folks.